All right, look at that. We made pretty good money today, $1,300, but unfortunately, that only looks good if you don't consider what happened yesterday when we took a pretty good hit. I didn't look at it to see exactly what the amount was, but yesterday the Dow was down 330 some points. Today we made it up a little bit. I think it was up 240 about when I came to class, something like that. So we got some of that back, so we did okay. But so far, through the semester, only Costco, Nike, Ritchie Brothers, VF Corp, and Zoetis are positive. Now, I'll start saying this, and I'll say it a bunch between now and the end of the semester. Stock prices and how we're doing doesn't have anything to do with your final project. Okay, I don't care what the stock price is. You guys are doing financial analysis, so we're going to be looking at the financial statements of the company and giving me some input. This is just kind of a fun thing. I hope that you guys watch it, kind of get into it. I do think investing long term, especially with your 401ks, IRAs, or Roth IRAs, is extremely important into these types of things. So that's kind of why I bring it up. And it's fun to look at. It's fun to give people grief when they're, but at least I'll have enough money today I can buy supper maybe or something. So anyhow, we got quite a few things due this week, right? Chapter 9, quiz. Ole and Lena is due this week. Okay, when you look at Ole and Lena, maybe I'll talk a little bit about Ole and Lena. Okay, Ole and Lena is a good example of the considerations that you need to give if you're thinking about refinancing a house loan. Okay, right now we're back to getting close to all-time lows in terms of mortgage rates. Okay, if you guys haven't been following the rates have been coming down. 30-year mortgages are, you can look it up. I think I saw around 3.6, and it varies by where you're at, geography. So nationwide, it might be around 3.6. Here in Montana, it might be 3.8. Who knows? Somewhere in that neighborhood. Bankrate.com is not a bad place to go look for those things. Okay, I don't like 30-year mortgages, by the way. I think you should never go more than 15, but that's just my own advice. And so I give you a few different ways to look at that problem using some of the techniques that you learn in Chapter 9, right? When we talk about present values and future values of cash flows, okay? That's primarily what you're going to look at. If you save a certain amount of money each month, okay, what's the present value of that, and how would that compare to what it might cost you to actually refinance your house? Refinancing houses is usually not a freebie. You usually have some expenses that you got to come up with, oftentimes several $1,000s. Okay, so if you can save $75 a month, is that worth it in present value terms? Okay, and what do I mean by present value? Well, I mean that $75 20 years from now, what's that worth to you today? If I came to you, Erica, and said, I'll give you $75, 20 years from now, or I'll give you $5 today, which do you think would be better? Probably not, but it's a pretty good guess. I was just thinking, using the rule of 72 is $5 today, depending on interest rate that you apply to it. If you took 7.2%, it's going to double every 10 years. So $5 today, it'd be worth 10, 20 bucks in 20 years. Did I say 20 years? Okay. Yeah. So the 75 would still be a better deal in that case. Okay. I just did a back of the napkin kind of a deal, but you guys are going to learn how to do it a little bit more officially, okay, and precisely by using some of those present values and making some of those comparisons, because they are big deals. Because there are things in business finance that you'd use all the time. Same thing. Should we pay off a piece of equipment? Well, what's our payments on it? What's our rate? Those types of things. What kind of interest are we earning? How do we make some of those calculations? And that's kind of what you're going to be looking at with Ole and Lena a little bit. So that's due. You got some easy problems due. Those are just payment problems, if I remember right. Somebody already did. Did you already do those, Erica or Alec or somebody? Okay. Somebody's already done those. It could be, maybe it's Rebecca. But they're just payments. something that you'll use the rest of your life. If you want to know what it's going to cost you every month to buy a car, okay, those are just payments. So pretty simple. Your Chapter 9 assignment then is due, okay, so quite a bit. And I said Chapter 9 we start to get a little bit more into, I think, things that, I could certainly say in banking I used every day 10 times a day. And in outside of my banking days, I still, obviously I teach it, so I still use it some with teaching, but I use it an awful lot otherwise too, just in personal finance types of things, calculating things, trying to figure things out, taxes, gosh, all those fun things in life. So your quiz for the day. Okay, we talked about on Monday, we talked about what happens if a company buys back its stock, right? What happens to the balance sheet? You got assets, liabilities, equity. What happens if a company sells some stock? Okay, companies can oftentimes, when they go public, maybe they'll put some on the shelf. I think it's called shelf registration. They can sell those at a later date, or if they've bought back some shares, right? They're in the treasury. They could resell those at a later date if they needed to raise capital, for example. Okay, so what happens to your balance sheet? Again, there's only 3 areas of the balance sheet: assets on the left side, liabilities top right, equity bottom right. I'll give you a hint, it affects 2 out of the 3. So which 2 and in which direction?
When you sell stock?
If the company issued stock or sold stock, correct. It's basically what happens when you have an IPO, right? Too. I shouldn't say it has to be an existing company that's already public. It could be when a company issues an IPO. Or I've been reading a lot, or not reading, but hearing a lot on CNBC that there's a lot of companies that are starting to do direct listings as opposed to IPOs. IPOs, initial public offerings, go through investment banks. Direct listings would not necessarily do that. Little different approach. I don't think we'll get into the intricacies of that in this class. It would be kind of fun. Everybody got the question? Everybody got the answer? No? Okay. I'm going to shut this off and then I'll come around. I know some of you had some questions on your project, etc.